Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. I'll be taking you through the next 10 minutes or so. We're going to look at two paper money practice trades in two high-profile names. We're going to look at Nvidia, and we're going to look at Tesla for the end of the year and into next year. How do we look at both those names? So let's get right to it. Let's talk about Nvidia. The numbers for Nvidia for the year, last 12 months, up 178%. The last 6 months, up 7.7%. Here's the one that's interesting. The last month, down 4.1% in the last month. So if you remember, on November 21st, it hit a high of $152.89. You can see it there at the peak. And then it hit the lows on the 17th of December at about $126.86. So it's had a good $25, $26 correction here in Nvidia. And it does that over its life. You can see over the last years, it rallies up strong on good news and then consolidates and sells off. It's not a straight line up or down, frankly, for Nvidia. So how do we look at a name like Nvidia? Well, over the holidays, I looked at Nvidia like something more passive to trade, right? We're not sure where it's going to go, so you want to use things like theta to help you. Be patient and wait. So the paper money practice trade that I did here in Tesla or in Nvidia was I went out to the January 17th expiration. So I gave myself duration, 25 days till expiration. I bought the 140 call. Then I went out to not this week, but next week, December 27th. Actually, it is this week. I apologize. It is this week, December 27th, and I sold the 140 call. That is a traditional call calendar, looking for, as you can see, the peak there, right around the 140 strike. So I put that in about $4.40 is the debit. It's trading about $4.25 right now. Now, here's the thing. $4.25 seems a bit pricey for a 140 call calendar. It is, except that because you've given yourself time, remember, you can extend duration on this trade and chip away at that net debit. When you do, you also chip away at the break even on this trade. So obviously, you're looking for a move towards the 140 strike, which, if you look on the chart, Tesla spent, or Nvidia, again, I've got Tesla on the brain. Nvidia has spent a lot of time at or near or breaking through or under or above the 140 strike. So this is a very popular level for Nvidia. So a call calendar focusing on the 140 strike, it gives you about 11 deltas, a little over 11 deltas long. It's collecting $6.50 a day in theoretical theta, and you're long a little vega on this trade too. Remember, like the call calendar, because you're buying something 25 days out. So this is a move. You know the utility of the calendar spread is that you can pick whatever you want in terms of the target where that spread peaks out, and that is the short strike. The strikes you use determine where that peak is. Could be the 141, 142, 143 strike. Could be the 138 strike. It's whatever you choose to calendar spread, and then price it out and check out the risk. But this one is buying 25 days out, selling 4 days out with a chance to roll into the January 3rd, chance to roll in the January 10th. And then if you so desire, you could extend duration and make it a vertical spread into the January 17th. So at least 2 chances to roll and maybe even 3 chances to extend duration on this trade. Okay, so there's our call calendar in Nvidia. The second one, Tesla. Now, Tesla's been a pretty incredible mover, as you can see on the chart here in the last couple weeks. It's moved post-election from right around $240 to $488. It hit its peak. And then it's moved back down to $426 pretty quickly. And so the one thing you can count on for Tesla is movement. This stock is moving all over the board. And what is it going to be? Is it going to be vehicles Is it going to be full self-driving? Is it going to be robo-taxis? Is it going to be energy? Is it going to be charging? What is it going to be that moves Tesla either up or down? I have no idea where Tesla stock is going. It's certainly moved up post-election. Why? Because the general consensus is that there will be less regulatory or a clearer regulatory pathway for Tesla, both in robo-taxis and in full self-driving. So both those that were approaching hurdles from the U.S. government may have a clear path now. That doesn't mean Tesla can't go up or down based on this news. So based on that, the paper money trade that I looked at was something in that plays for movement. You've seen me do it here often on this show, but we're going to reestablish again out till January 7th, so 25 days. Now, if you go to the Thinkorswim platform, look at that right column in line with January 17th. You see an expected move up or down of $76 in either direction. Think about that now, because it's important to what we're doing here. $76 expected move in either direction. What I did, I went inside that move and I calculated about a $50 move in either direction. And that's how I priced my iron condor for 25 days out. I bought the 465, 475 call vertical, about $50. Our short, our top peak of the call vertical is about $50 move from where we are right now. Then I also went in, same expiration, bought the 385, 375, about $50 on the downside for a movement. And so I'm way inside the expected move for the next 25 days. Because of that, the trade-off, and there's always trade-offs in options, is I'm spending a little more than you may have to spend if you did a further out or strikes further out, or if you went to the full $75 move in either direction. That would probably cost you less money. But I'm looking for a movement in either direction. I'm not sure which direction. I put it in about $5.25. It's trading about $5.15 right now, so a little bit less than that. So right around $5. Think's what it is. You're risking about $515, $525 to make about $475, but you're inside the expected move, and you can be profitable in either direction. Now, there's risk on this trade, right? The risk is that nothing happens over that period. The risk is if we stay between the strikes of 475 and 385, that this long iron condor that plays for movement would lose money. Why? Because this is an actual scenario where you are paying theta each day of about $5.50, but that'll pick up as you get closer to expiration. Right now, it's costing you about between $5 and $6 in theoretical theta negative per day. So the long iron condor is something that plays for a big move in either direction, which if you look at Tesla, you've already had that, right? Just in the last week or so, you've had a move from 488 to 426. So there's one $50 move. Is there another one in Tesla? All right, let's recap our two trades for today. In Nvidia, we did the long call calendar, targeting that 140 strike that's been so popular in Tesla or in Nvidia. And in Tesla, the long iron condor, focusing on a $50 move in either direction between now and January 17th, when the actual implied volatility calls for a 75-point move. All right, that's Daily Trader for today and for the rest of the year. We'll see you next year with more editions of Daily Trader. Have a great holiday season, everyone.